When you think of legendary investors, Warren Buffett is at the top of the list. Despite his billions, his advice is refreshingly simple. Anyone can use it to change their financial future. These are practical steps, not just theories, that Buffett has used for decades. Today, we'll break down his 7 most powerful money secrets so you can apply them right now. We'll cover the mindset and habits that truly separate the wealthy from everyone else. And stick around for a bonus tip, the one habit Buffett credits most for his success. Let's dive in. Buffett's foundation is simple: live below your means. He still lives in the same house he bought in 1958 for just over $31,000. He could buy any mansion, but he chooses not to, because every dollar not spent is a dollar that can work for you. He drives a modest car, eats at McDonald's, and avoids flashy spending. It's not about being cheap, it's about being intentional. Every purchase is weighed against its opportunity cost. Could this money grow instead? The goal isn't deprivation, but prioritizing long-term freedom over short-term gratification. Create a gap between what you earn and what you spend. That's your seed capital. Without that gap, even high earners can end up broke. Track your expenses for a month and find the leaks. Start redirecting wasted money into investments or savings. Frugality should become a habit, not a punishment. Master this, and you unlock the door to financial independence. Living below your means is the bedrock of wealth. Build your gap, protect it, and let it fuel your journey. Buffett's best investment advice: invest in yourself. Your skills and knowledge are your greatest assets. Before you invest in stocks, invest in the machine that earns your money, you. Your earning potential isn't fixed. You can grow it by learning new skills or improving existing ones. Buffett took a public speaking course early on, and it paid off for life. Lifelong learning is key. Read books, take courses, find mentors. Even a small investment in your education can yield massive returns over your career. Don't see books or courses as expenses. They're investments with huge upside. The more valuable you become, the more you can earn, and the more you can save and invest. This creates a powerful cycle. Learn more, earn more, invest more, grow wealth faster. Identify your skill gaps and start closing them. Make self-improvement a habit. Your future wealth depends on the value you bring to the world. Don't neglect your number one asset. Invest in yourself, and the returns will follow. Debt is the biggest threat to building wealth, especially high-interest debt like credit cards. Buffett warns, avoid it like the plague. Why borrow at 18% when you're hoping to earn 8% in the market? It's a losing game. Debt is a claim on your future income and adds stress to your life. There's a difference between good debt, like a reasonable mortgage, and bad debt, credit cards, payday loans. If you're in high-interest debt, make paying it off your top priority. Cut expenses, pick up extra work, and attack that debt relentlessly. Use the avalanche or snowball method, just get it gone. Once you're free, never go back. Use credit cards for convenience, but pay them off in full every month. Discipline is key. Live below your means to avoid falling back into debt. Avoiding bad debt is your financial defense. Even the best investments can't outpace high-interest debt. Protect your wealth by staying debt-free. Make this rule non-negotiable. With your finances in order, it's time to invest. But Buffett's approach is all about the long term. He buys great businesses to hold for years, not to flip for a quick profit. His favorite holding period? Forever. He ignores market noise and focuses on the underlying value of companies. This long-term mindset removes emotion and reduces fees. Constant trading leads to mistakes and extra costs. Instead, buy and hold. Let your investments grow over time. Think of it like planting a tree. You don't dig it up every day to check the roots. For most people, low-cost index funds are the best way to apply this. Buy a piece of the whole market and let it grow. Set up automatic monthly contributions. This is dollar-cost averaging. Don't obsess over daily market moves. Focus on your savings rate and your career. Let the market work for you in the background. Slow and steady wins the race. That's how fortunes are built. Buffett's circle of competence rule: only invest in what you understand. If you can't explain how a company makes money, don't buy its stock. This principle saved him from bubbles like the dot-com crash. Don't invest based on hype or FOMO. That's gambling, not investing. Do your homework. Read reports, understand the industry, know the company's competitive edge. If you can't identify a company's moat, stay away. For most people, becoming an expert on dozens of companies isn't realistic. That's why Buffett recommends index funds. They're easy to understand and diversify your risk. When you buy an index fund, you're betting on the overall growth of the economy, not just one company. Stick to what you know. If you don't understand it, don't invest in it. This rule will save you from costly mistakes. The real magic of investing is compounding, reinvesting your profits to earn even more. Don't spend your dividends or gains. Put them back to work. Over time, this snowball effect turns small sums into fortunes. Buffett's wealth exploded thanks to decades of compounding. The earlier you start, the more powerful compounding becomes. Set your investments to automatically reinvest dividends. Most brokerages offer this as a drip. Resist the urge to cash out profits for lifestyle upgrades. Your portfolio isn't an ATM, it's a wealth-building machine. Every dollar you reinvest is another worker growing your nest egg. Let compounding work for you, uninterrupted. Start early, reinvest always, and watch your wealth multiply. This is how small beginnings become massive fortunes. Don't interrupt the process. Patience is the glue that holds all these principles together. Buffett says the market transfers money from the impatient to the patient. Investing is a get-rich-slowly plan, not a get-rich-quick scheme. The biggest gains come from staying invested for decades, not from timing the market. Market downturns will happen, don't panic. The patient investor sees crashes as opportunities, not disasters. Stick to your plan and keep investing, even when it feels tough. Ignore the noise and focus on the long game. Buffett has held core investments for decades, through every crisis. True wealth is built brick by brick, year by year. Once you have a solid plan, let it work. Don't tinker constantly or obsess over your balance. Focus on your life and let your money grow in the background. Patience is your greatest financial superpower. Those are Buffett's 7 core secrets. Simple, timeless, and accessible to everyone. The key is consistent action, not just knowledge. Your financial future is built on daily habits, not secret tips. And here's the bonus tip: always keep learning. Buffett reads for hours every day, believing, the more you learn, the more you earn. Make lifelong learning your ultimate investment. Feed your mind and the returns will be priceless. Thanks for watching. See you in the next video.